thought, would you consider it a monetary metal then?
I consider it a financial metal.
Okay, what's the difference?
It formerly was a monetary metal that was used in monetary systems, circulating coins, and as a denominator for paper currencies. It is no longer, and hasn't been for at least, in terms of denominating paper currencies in silver and having convertibility, that ended in the 1960s. And in terms of circulating silver coinage, it ended in the United States in the 1960s, and it ended in Europe and the rest of the world around the late 70s, early 80s, when the price of silver went from $5 to $50. They just took the silver out of the coins. So silver ceased to be a monetary metal 40 years ago. And really the movement to demonetize silver started in the 1950s and 1960s, early 1960s.
Somebody at a conference showed me a $1 bill from the 60s. He has kept it since the 60s, or maybe it was a family heirloom. But it said that it could be converted to an equal amount of silver should legally. Are you pulling up something similar now? Is that?
I was going to get. I have a silver certificate in my drawer.
Yeah, it's a silver certificate.
Called silver certificates. Yeah.
Give us a brief history lesson, Jeff. Why did they stop doing that? I mean, this was before the end of the Bretton Woods.
No. It was in the 1960s. This is a silver certificate.
Right.
Yeah, this is a silver certificate, and it's very interesting and it's very important. Silver certificate issued by the U.S. Treasury. Now, that's very important that it's the Treasury that issued it, because the Treasury stopped issuing bills for all intents and purposes in the early 1970s, when we demonetized gold. And most of the paper currencies that we have now are Federal Reserve notes as opposed to Treasury notes. And there's a very, very important difference. But look, silver was used as a currency for millennia. In the 19th century, it was still used as a currency, and it was probably the major currency being used in circulation in the United States at that time and in Canada were Spanish pieces of 8, silver coins, and the reason was the U.S. didn't have a stable banking system in the 19th century. There was a tremendous amount of fraud by unregulated banks and private banks. And so as you were migrating westward, if you had currencies from a bank that was a private bank in the East, and you went out west to, be a homesteader, and you had those currencies, people would say, well, this is a piece of paper. So you would convert your paper into gold and silver, mostly silver because of the value, the lower value per piece of it, and you would use that. So silver was an integral part of the monetary system in the 19th century. It started to come out in the late 19th century, but it continued to be used in circulating coins. And the government had various silver purchase acts that started in the 1870s and were unwound in the early 1960s to support the silver mining industry as we moved to demonetize silver. And that's why you had in the late 1950s, you had a crisis. And what it was after World War II, silver use rose sharply in jewelry and sterling ware. It rose sharply in photography, which had developed massively during World War II, and in refrigeration and electrification, which also took off through the 50s. And the government, the U.S. Treasury, had about 3 billion ounces of silver in its inventories at the beginning of the 1950s. And anybody could go there and buy it for like 81 cents an ounce. And the market price became greater than that. So fabricators and other people started going to the Treasury and saying, here are my dollars, give me silver because I need it. And that $3 billion started to dissipate sharply. And by 1961, there was a monetary crisis because people were using up the silver at a rapid rate. They were taking silver coins, and even though you weren't supposed to melt them down and de-alloy them, they were doing that. You had troubles with coinage and circulation. So the U.S. government, 1961 to 1967, passed various pieces of legislation to demonetize silver. and sold billions of ounces of silver, both in coinage form and in bullion form, to keep the price below both $1 an ounce, because a silver certificate was worth $1. So if you had a silver certificate in the 1960s or 50s, you could go to a national bank and say, I have a silver certificate, give me an ounce of silver. Yeah. And so you had $1 an ounce, at which you had a real problem with the silver certificates. And they weren't just one, they were $1, $5, $10. I think there might have even been $20 silver certificates. And then the coins had a melt value of $1.29. So at prices over $1.29, it paid you to buy coins, go to the bank and get rolls of quarters, nickels, and dimes, and then melt them down and de-alloy it. Mm-hmm. So the Treasury worked very hard in the 60s, from 1961 to 1967, to keep the price of silver below $1 or $1.29, because to let the price rise above that would cause a currency crisis.
I know this is not the... Sorry, please continue.
Very important to note, this all ended circa 1967. So I know there are conspiracy theorists out there who will say, Jeff Christian said the Treasury was trying to manipulate the price below $1, $1.29.
Yeah.
And that was true back then, but it hasn't been true since then.